Hello traders, Gary Wagner here. Just about 12:30 in Honolulu, 6:30 in New York. It is Tuesday, June 19th, 2018, and this is the Daily Report for Gold and Silver. Pressure on the precious metals continues with a strong U.S. dollar. Gold closing at $1277.50. That's a net decline of about $3, but as you will see in today's show, that is due all to dollar strength. The same cannot be said for silver, which exhibited lower pricing for two reasons. One, a stronger U.S. dollar and selling. That closed at $16.31. And as I said, dollar up about 20 points today at 94.66. The trade war is definitely affecting U.S. stocks, with the Dow Jones Industrial Average losing about 287 points today, closing at 24,700. Bitcoin futures a little unchanged, up a little bit at 66.90. Gold continues to lose value as it trades to a new all-time low for 2018, currently down about $3.10 at $12.77. On the surface, it might not appear that it is getting any kind of a safe haven boost, raising the price, but on closer inspection, you'll see that of the entire precious metals complex, gold is the only precious metal to be adding value today based only upon buying or selling in the market before we add dollar strength. In fact, it is dollar strength that is weighing heavily on the entire commodity sector, not only base metals and precious metals, but things such as grains. And the fact that gold is reacting differently than the commodity sector as a whole, and in fact other precious metals, is clearly illustrated when we look at the Kitco Gold Index for today. When I took this screen print that I've just put up on the screen, spot gold was down about $2.80, and normal trading was actually bidding gold's price higher by about 65 cents. Now, while that is not a lot, in contrast, we lost 12 cents in silver due to normal trading, about 0.75% drop, 1.5% drop in normal trading when we look at platinum, and a loss of $18.35 in palladium, a loss of 1.87%. And when you add dollar strength to that equation, we can see the dynamic pressure that the precious metals complex was under today, and it was only gold that was able to gain anything due to normal trading. Nonetheless, the strong dollar is affecting all of the precious metals. We are looking at a daily dollar chart. It is up about 0.2% today, trading at 94.66. And the key as we look at this on a technical basis is where we have our current highs that have come in. Recent highs have come in roughly at 95. We can also see that that matches some highs that came in towards the last quarter of 2017, when they also reached this apex at 95 on the dollar index. The question is, will we see the dollar move above that current resistance area? And traders, based upon our current technical studies, if we do see the dollar break above 95 on a closing basis, we could see the dollar index move as high as 98. That is our next real major resistance level. And traders, we can really see the net effect of the strong U.S. dollar and pressure on the commodity complex when we look at silver, currently down about 13.5 cents at 16.30. It is clear when we look at this chart that the lows that came in today at around 16.23 matched the 23% retracement, and a strong break below this could challenge recent lows that came in at the end of last year when silver was tracking below 16 at $15.64. As you saw from today's show, gold is absolutely beating to a different drummer. Whereas the precious metals complex was lower in its entirety, when we looked at the components today, gold was the only precious metal that actually was bid up due to trading. What that tells me is that gold is acting in as much like a currency, more so maybe than even a safe haven, and the dollar is the currency to beat. It's still the strongest of the players. It is for that reason I would expect gold to have a rough road, but at some point move back into that safe haven asset class, and that's when we'll see it begin to gain higher pricing. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.